Welcome to a new week of Equity Mates. We're always excited to be here. My name is Bryce, and as always, I'm joined by my equity mate, Ren. How are you going?
I'm very good, Bryce. Good long weekend.
Great long weekend, yes.
Yeah.
Very good, actually.
You're pretty chipper today.
Yeah, I'm feeling good.
For the keen-eyed Equity Mates on AusBiz viewers at home, they'll notice that Bryce wasn't too chipper last week, and has come in hot today. We're really going to be riding the highs and lows of the Essendon Bombers this season, I think. When they get a win, we're going to have a strong first episode to the week.
Yes.
And when they get a loss, you're not going to be too sharp.
Massive win on the weekend from the Essendon Bombers over the Saints. But same to you, Ren. The
Yeah,
Swans, big upset over Richmond. But look, we're not here to talk about the Bombers. Did you have a good weekend?
I did have a good weekend.
Nice.
Let's get on with the show.
Let's get on with the show. Look, there's been a lot of chat in the Equity Mates community, as always, about tech.
Love tech.
Love tech.
Yeah.
Everyone loves tech, both here in Australia and overseas. Ren, you and I don't keep a close eye on the markets day to day. We are exposed to, obviously, some of the big tech companies. But a few numbers have come across our desk about the pool.
Our shared desk.
Our shared desk, yes, work from home. A few numbers have come across our desk, sort of highlighting the pullback that we have seen in some of the big names over in the US and here in Australia over the last sort of few months. And it's been pretty surprising, I guess, to us, given that we're not in the weeds on all of it, but can understand how some of our community...
Can you stop saying that we're not in the way?
You know what I mean. I'm not looking at my portfolio every day.
Yeah.
But can understand how some people in the community would be feeling a bit taken aback.
Yeah, well, I think this is a follow-on to the episode we did on inflation a little while ago. And, we were speaking about as inflation fears were coming into the economy, bond yields were rising as a result. And some of the biggest growth stocks, especially in America, those, especially tech stocks that had gone well ahead of their skis, I guess, from a valuation standpoint, were starting to pull back a little bit. And then, as you said, these numbers came across our desk, and this is sort of the result of that in some ways. Like, obviously, this story hasn't played out. It's not even close to being played out. Yeah. But this is probably the next step in it. Now we're starting to see some of these valuations really pull back from the all-time highs that we were seeing the end of last year. Yeah.
So we've crunched some numbers and had a look at some of the big stocks, compare where they're sitting now compared to their 52-week high. And some of the numbers are alarming, Ren.
Well, yeah, alarming, but take that alarm with a grain of salt.
Yes.
Mixing a couple of metaphors there. We're very much about long-term investing. That's why, you said we're not checking the markets every day.
Yeah.
And some of these companies have still been incredibly good investments and probably will continue to be incredibly good investments. But in the short term, the numbers are quite alarming. You've put a list together.
Yes.
Do you want to just rattle off the list and then we can talk about some of them?
Sure.
Now you've split it up into the US and Australia.
Yeah.
I think maybe let's just start with the US.
Heavy focus on the US. That's where a lot of the companies that our community are invested in. Starting at the top, so we've obviously got Amazon down 8% from its high, Apple down 12%, PayPal and Twitter both down about 17%. Salesforce down 21%, which is interesting because I did try and pitch that for the community portfolio.
Maybe now's the time to buy.
Maybe time to buy. Shopify, Ren, a stock that we both love, is down 22%. Tesla pulling back 20%, but given the run that it's had, still trading pretty above where it was even sort of 2 years ago. Spotify down 25%, Peloton down 34%, Snowflake down 40%, Zoom down 43%, DoorDash down almost 40%, Virgin Galactic suffering down 50%, really hurting. And then Palantir as well, down 40%.
Yeah.
Some pretty big pullbacks there. And depending on how you're looking at it, you might be looking at it from the point of view of a good buying opportunity. You might be looking at it from the point of view of they're coming back off from some very inflated valuations and reverting to the mean, I guess, somewhat. But it depends how you take. Any there that are really surprising for you, Ren?
Well, I think for context, you've skipped a whole bunch on the list, and I'm not going to go back over them, but I think that is just a high-level view of not carnage, but a serious pullback that's happened across a lot of big tech. Not all of these companies are unprofitable, but a lot of them are.
Yeah.
So let's call it unprofitable high growth tech has had a pullback.
Yes.
In terms of the ones that stand out for me, I mean, I think it is interesting that Apple and Amazon were the first two you mentioned. Apple down 12%, Amazon down 8%. The pullback on those two stocks not nearly in the same ballpark as some of the more unprofitable tech names.
Agree.
So I think part of this might be a bit of a flight to safety. And, you know, a lot of these unprofitable stocks, you know, Spotify is a big one that you're a fan of, lost a quarter of its value from its all-time highs. Virgin Galactic lost half of its value from its all-time high, or its 52-week high.
Yeah.
Like, they're big pullbacks.
Yeah, and Uber down 9%. I mean, I wouldn't say that's a flight to safety, but I don't even know if I don't think they're profitable either at the moment.
No.
So,
and probably, or maybe never will be.
Maybe never will be.
That's a big call. That is a huge call.
So what about some of the Aussie stocks, Ren?
Oh, I've still got more US ones to talk about. But
Okay,
let's move on. Do you want me to talk about this?
Yeah, what do you got?
So, Australia wasn't spared, I think is the headline. The Australian Tech Index, the ETF ticker is ATEC, was down 10%. So that's a basket of the major tech stocks in Australia, down 10%. So not as bad as some of what we saw in the US. But if you scratch the surface and you look at some of the bigger names, Appen, down 61%.
Yeah, pumped.
Yeah. Afterpay, Australia's favourite stock, down 28%. Zip, which was probably the Equity Mates community favourite stock to start 2021, down 40% from its 52-week high.
Yeah, and a lot of hurt there for some of the community who were getting in as it was starting to hit that 52-week high. So, look, Australia hasn't been spared. Sort of no surprises, though, as the theme continues, I guess, around the world. Yeah.
Now, you mentioned there, is it a good buying opportunity or what should you do? I think let's end the episode with that. Let's end the episode with how we're approaching that as investors. Before then, it's Easter. We've just come off Easter, you know, celebrating Jesus' resurrection. So I'm going to play on that theme and ask you a question. Of these Australian and US tech stocks that have taken a battering recently, which stock would you resurrect? Maybe which two stocks? If you were going to pick two of the list that you read out, or the Australian stocks that I read out, which are you backing to make a resurrection? Get resurrected?
Define resurrect.
Crash back through their 52-week high and hit all-time highs in the near future.
Okay, well, I mean, there's a lot to choose from here. I think, you know, Amazon, Apple, PayPal. I mean, there's a great selection that I think, you know, inevitably are going to continue to be good businesses over the long term. But two that I've pulled out, Ren, the first one is Spotify.
Okay.
I think there's...
You love Spotify.
Love Spotify. Love podcasting. Love audio. Media business.
You just want the Spotify podcast buyout at some point.
Yeah, Spotify, if you're listening. Look, so I think I look at this and, you know, the market price fluctuations happen. What's going on with the underlying business? 345 million monthly active users for Spotify in the last, that was in the last Q4 2020 report. They're anticipating that's going to grow to 427 million by the end of 2021.
I recently listened to an interview with Daniel Ek, the Spotify CEO, who reckons it's going to be 1 to 2 billion.
That's crazy. Well, they need to update their guidance.
That's like a quarter of the world.
I don't see why that's not possible. Not impossible. 155 million paid subscribers. Obviously, they're predicting that's going to grow to 184 by the end of 2021. They're expecting to make just shy of 10 billion euro in revenue for the full year 2021. They're trialing new premium models. So the underlying business for Spotify for me is still very much there. It's
just not profitable.
Just not profitable yet. They're not profitable yet, but I don't think that the pullback is a real indication of what's going on under the surface. So in terms of resurrection, you know, I can't see a competitor that's really pushing them at the moment to be the number one audio provider.
Apple Music, YouTube Premium.
No, YouTube Premium disagree.
Okay.
Apple maybe, but you look at the trend and Who's the last person you've spoken to that's using Apple still on their phone, other than me?
My housemate Rohan. Shout out to Rohan.
Yeah, but he's weird. But so look, yeah, my first stock for a resurrection, it's not going anywhere, is Spotify.
Fair enough.
Yeah,
Fair enough.
and in fact, I have bought some more.
Really?
Yeah.
There you go.
Yeah.
I'm going to give you one.
What do you got?
Shopify.
Yep.
Love Shopify. I think it is just such an incredible business. Here's just some of its numbers from its Q4 report to give you an idea of just how quickly it's growing still. So Q4 2020 compared to Q4 2019, revenue up 94%, profit up 91%, monthly recurring revenue up 53%, and it improved its margin. Its adjusted operating income was 6% of revenue in 2019 and is now was 20% of revenue in Q4 2020.
Wow.
So just powering ahead, starting to build some operating leverage, growing its monthly recurring revenue, and it just you look at the number of online stores that it powers, everything from Tesla to Hasbro, Kraft Heinz to Penguin Books. Like, if you're not selling on Amazon or eBay, chances are you're using Shopify.
Yeah. It's a pretty phenomenal business. And you're a shareholder?
I am.
Yeah, nice. So we've got Shopify, Spotify, another one from me, Ren, that is I'm pretty confident will make a resurrection.
Really?
Well, look, Tencent.
Okay.
It's a behemoth, as we know.
Yes.
It is facing into some pretty significant potential headwinds. A lot of regulation coming from within China. There's that antitrust sort of point from the government, and they want to take a bit more control, I guess, over data regulation and whatnot for tech companies and internet companies in China. So that's still yet to play out. The US is also threatening some sort of delistings of companies that aren't playing
ADRs.
game. Yeah. So a few things to sort of wade through, but at the end of the day, Alibaba and the Tencents of China are just absolute monsters, and it's hard to see how they're going to suffer from a pullback point of view. Yeah.
I think part of Tencent's pullback was swept up in that Bill Huang, highly leveraged trades that he got the margin call. They were unwound. So I think, part of the pullback might be because of that.
Yeah.
So one more from me. Twitter.
Love it.
Great business, terrible investment is really the only way you can sum up Twitter in the last, decade?
But most recently over the last 12 months, if you got in at the right point, pretty good investment.
Yeah. It is a business that has just grown its monthly active users, daily active users, engagement rates, but its monetization just hasn't been there. And Twitter recently announced a couple of new features, which we're actually going to speak about in a bit more detail later in the week. But it's borrowing from Facebook's playbook to borrow from other social media.
Yeah.
And it's really focusing on monetization. And, it's one of the features it's introduced is this super follow feature, where it's like a Patreon Substack style. You pay to follow certain people. Hopefully that'll improve monetization. There are some other things that will hopefully improve monetization. So for me, Twitter is one that, had its moment in the sun when the president used it as his chosen communication tool. But I think it is sort of continues to go from strength to strength, and it's got such a powerful network effect. Like, everywhere in the world breaks news on Twitter. Every internet subculture exists on Twitter. So that's one for me that I think it might not be the first to get back to its 52-week high, but it'll get there.
Yeah. So quickly to close this out, Ren, we got to answer the question, what does this mean for us as investors, and how are we playing this sort of a tech pullback? What's your thoughts?
I mean, this is why you have cash on the sideline, really. And there's nothing to say that this is the end of it. Like, this probably isn't the end of it. Some of the companies will keep going down. And, it's all about your risk tolerance, your ability to withstand your portfolio being in the red. But for me, I'm going to put some cash to work.
Yeah.
I have put some cash to work.
Yeah, likewise. For the companies that I have been invested in, I've used this as an opportunity to buy a bit more. I'm not about to sort of spray around and take advantage of the 50% pullback in Virgin Galactic, for example. But anyway, you're right. That's why we have cash on the side.
Yeah.
Well, that brings us to the end of another episode of Equity Mates. Hope you had a great long weekend. We've got some fantastic episodes coming up over the next couple of days, so make sure you tune in. For more information on Equity Mates, you can find us online at equitymates.com, or you can send an email to contact@equitymates.com. But Ren, Watchlist Wednesday tomorrow.
Watchlist Wednesday tomorrow. It's come up fast with the short week. We got Andrew Brown from E72 Holdings, who's going to be talking to us about a couple of stocks controlled by billionaires you haven't heard of.
Nice.
So that's going to be a Watchlist Wednesday not to miss. So see you all same time, same place tomorrow.
See you then.